Hey, what's up, Bob Mortgage Nation? This is the 16th episode of the Ask Bob Mortgage Show. You have questions, I have answers. Great question.
What I want to be able to do is give you world life experiences that I've been going through.
So on the show, what do we talk about? Well, it's a way for me to answer questions that you guys are asking out there on social media. You just go out there, Facebook, Instagram, Twitter, YouTube, just ask your question, hashtag AskBobMortgage. My team every week will put together the questions that y'all guys ask, and I'll answer them on the show. So we have the lovely Marla back on the show this week. So let's go. We got some questions. And this is our special Christmas edition. So Merry Christmas to everybody.
Merry Christmas.
All right, what do we got?
We got Cheryl of LinkedIn asked, I've been hearing from LOs across the country that they're finding their past database is not yielding the same number of new loans monthly as it has in the past, likely due to the heightened interest rates. Therefore, LOs are forced to go outside of their database to develop new business. This often takes the form of wanting to build new realtor relationships. But that has been problematic as well. What has your experience been with that?
Let me read this a little bit. That's a long question.
It is. That's why when you had that front part, I'm like, okay.
High interest rates are for LLs are forced to go outside that database. But okay. All right. So, Sherry. So if they're relying on their database, Sherry, right?
Yes.
Okay. If they're relying on their database and they're struggling because interest rates are rising, then they're relying on their database for the wrong reasons. That means they're going after refinance business. And if you're a loan officer out there going after refinance business, look, you've been in trouble for a while because interest rates have been on the rise for a while. And yes, those are the ones having challenges and difficulties trying to secure realtor relationships, right? And look, there's a lot of loan officers out there, a lot of realtors out there trying to figure out who's best to work with, and it could be problematic for those that are just getting out of their database space, going for refinances, getting into the realtor side of it. And so I would encourage anyone that is talking about going and working with realtors now, is you better be able to bring a lot of value. It is not about just handout open and empty asking for business. You got to be able to 10x the amount of value that you can bring to that real estate agent to really develop long-term strategic partnerships with them. There's just too many agents, there's too many originators out there running around to just be handout open and empty. I mean, you got to bring value, and value is in a lot of different forms, but you got to really find your value and then go to market with that and realize that it's going to take 10 times the effort, 10 times the value to get what you feel you're going to need in return, just because of the sheer volume and the consumers controlling a lot of the upfront pre-qualifications and everything. So do not rely on your database. Rates are going to always be rising. They're going to go lower. They're going to go higher. If you're focused on refinances, I just believe you're focused on the wrong thing. We do refinances, but it's just kind of like gravy on the top, right? I mean, if refinances come in, we're cash out refinances or rate and term refinances. It's just the icing on the cake for us on our production model. Okay. Is that good?
Yep.
Awesome. You approve?
I approve.
Awesome. Thank you. All right. What do we got next?
Cody on Facebook. He asked, when comparing lenders, should you only look at the annual percentage rate? Is the annual percentage rate calculated the same with every lender?
So, answer the second part. Yes, it's calculated the same with every lender. I mean, but what goes into it could be different, right? So the interest rate, Cody? The interest rate, Cody, is what your payments are going to be based off of, right? That's how you would calculate your monthly payment and the amount of interest that you pay on that loan for each year, right? But the APR takes into account fees into that rate. So it's going to be higher than your interest rate. Has nothing to do with the actual payment, but it does say your borrowing cost, like your discount point, or there could be processing, underwriting fees, mortgage broker fees, even some title company fees roll into what we call fees that impact your APR, okay? And so that's why they're going to be higher than the actual interest rate. But more importantly, what I would encourage you to do if you're shopping, yes, you can look at the APR, absolutely, but get with the originator that's really going to actually look at this as a total cost of ownership, because the APR is not always what drives the best decision when deciding what loan you want to take, right? So if you're comparing fixed rates, but you know you're going to be out of the house in 3 years, you may look at an ARM. If you are comparing taking money out of an investment account that has high yield, or you're going to have to pay significant taxes on it, as compared to doing a loan at a higher rate where the lender is paying cost, or we get a grant from the state of Texas to cover all your down payment and closing cost, then your true ownership cost may be less,
right,
even if the interest rate or APR is higher. So yes, you should look at it, but at the end of the day, there is a better structure, and it's a total cost of ownership structure, and that's something that I provide to every client out there. So, do you agree with that one?
Agreed.
Man, I'm 2 for 2 today. What else we got?
All right. Seem like you have a big fan, Bob. Riley sent in another video. Remember Riley?
Riley, football Riley from Halloween.
Yep.
Brandon, key that video, dude. She rocked it.
Hey, BobMortgage, happy Halloween. Are you going to take your kids trick-or-treating?
So I got another one? Yeah, good. Let me see.
She asked, hey, BobMortgage, what do you do for Christmas?
Play that one. That's awesome.
Hey, BobMortgage, what do you do for Christmas?
Awesome. So what do I do for Christmas? Well, look, it's a special time for us and our family and stuff like that. That's awesome. So seriously, we start off, it's a big deal. We start off with, Christmas Eve. My wife and I always have friends over. Friends have kind of become our family. Family comes over, but it is about our friends, and it's just come and go, and we all sit around and talk, and it's just really about community and family, as we say. And then every Christmas morning we wake up, and it's just about being together. We do open presents. We're not a big present family.
Neither are we.
We want all these things around under the tree. Honestly, we do feel it like every day is Christmas, right? We really feel that when we get up every day. So that's good enough. But yeah, we spend time together. We usually do a puzzle together. In the morning after Christmas, we always sit down and do a puzzle. It's one of the very few days that, one day out of the year, maybe 2 days out of the year, I'm in my pajamas for all the way up until lunchtime. We don't do anything. So it's a lot of fun. So I want to know what you're doing. Maybe I'll get a repeat video back as to what you did that day. But I really appreciate that message. That was really, really cute. All right, what else we got?
That's all we got.
Awesome. Guys, I appreciate it. You guys have a phenomenal Christmas. Have an awesome weekend. You guys keep asking questions, and I'll keep answering them.